Steve, give us your thoughts on what Michael Lewis has said, because high-frequency trading certainly does make up a bigger part of the U.S. stock market than it did just a generation ago. Some people say for up to half of volume.
Well, I don't think the market's rigged. I don't think there's
surprise,
the HFTs are rigged. I do think, as I stated on the show before, is that you do have an issue with unexecutable orders, phantom orders that he does bring up in the book. And I think that is a problem because you go to execute an order and you think you're going to be able to execute and it's not there anymore.
Who gets victimized in that situation?
Well, I think we're pointing a lot of fingers and saying that the retail guys are getting victimized, but most retail traders are using one of the regular retail platforms of sending an order to a high-frequency trading firm or a market maker that's using a high-frequency strategy behind that. A Knight, any of those guys are using high-frequency strategies. And they're protected. Those orders are protected by the best bid and offer rules, the order protection
So this
rules.
is not about the little guy?
This is not about the little guy.
Who's it about?
It's about more of the institutional, the block orders.
Michael Lewis wants to sell a book. He's on 60 Minutes saying it's about the little guy. You're saying he's wrong?
It's about the block orders. Why would you put a block order up on an exchange when there's hidden orders you could use?
Steve Roach is aging over here. He likes the quality of the Chinese executions in Beijing and Shanghai. Steve, on high-frequency trading.
Look, this is just pure journalistic sensationalism. Flash traders are bit players compared to the biggest rigger of all, which is the Fed. Come on. The idea that, the market is rigged makes it sound like some computer is in a back room conniving to squeeze this guy or that guy.
Steve, you and I remember quoting in eighths and halves, IBM 180 and a half.
I remember seeing you on the floor, Tom.
You remember seeing me on the floor running around like this tall. But within that, Steve, Arthur Levitt, who's been a bastion for the individual investor forever, even he is like you, ambivalent about how important this is. Steve Ehrlich, what does Steve Roach and Arthur Levitt miss about the heat of this debate?
Well, look, there's no doubt. You talk about eighths and 16s, and pre-decimalization, you had spreads that were wider, and the cost to execute for retail traders and retail customers was huge. I remember doing a trade in the late 80s, paying $150 for a 100-share order. And now you pay less than $10.
It cuts both ways, and they had JPMorgan 60 and 1/16.
When we went to steenths, and then you had to wrap your head around, wait, how do I go from a steenth to an eighth? How do I do that?
Stanley, how do I do 30 and 7/8.
So, Steve, explain to me why the system is not rigged.
Well, the system's not rigged because I think you do need HFT and those volume. That's replaced
HFT meaning high-frequency traders to provide liquidity.
Correct. We need some liquidity in the market. You've seen the flash crash, and you've seen a bunch of volume come into the market. The volume's tapered off. You're averaging 6.5, 7 billion shares a day rather than 10 when it was.
But what about the assertion that Michael Lewis makes in his book, where you have companies that provide access to exchanges 3 milliseconds faster and that people will pay up? That sounds like rigged to me.
No, look, there's always been a race to zero in speed with this automated electronic trading. We've been talking about that in the business for years, going down to zero. They're talking nanoseconds now.
Look, this is about margins on transactions, not about price levels. When you use the word rigged, it makes it sound like somebody is inflating or deflating the overall price level of the world's largest stock market. That's just patently incorrect.
When you look at this, Steve, and you look at Mr. Lewis's assertions and the idea of rigged, I want to make this clear. You feel as an investor, as a retired from Morgan Stanley, working now full-time at Yale, that you can go into the market, make trades, and get a fair price?
I think, if I don't get down to the last 16th or 8th,
10 to the minus
I don't care,
9.
Tom. I'm not flipping my stocks
Steve,
every hour.
Do they teach scientific notation at Yale? I don't think so. The math of this is, what's the number one thing I need to know, Steve Ehrlich?
You need to know retail investors are getting a fair execution every time they execute their order. They're getting a very good price at a very low commission.